Through the decades, we've been told that our homes are investments. Somehow that even morphed into your home is your retirement plan. But a house is neither. In fact, for Gen X, a house can actually be a liability. The homes where we raised our kids, made our memories, they've quietly become a threat to our retirement. How can this be? So let's get into those financial blunders that have turned the dream into a financial drain. And we'll get into how to change that direction and turn each one of them around. So let's get to it. Now, the first blunder is the forever mortgage. Now, this one's a classic Gen X move. We refinanced again and again, chasing that lower payment, thinking we're saving money. But every time we sign those papers, we reset the clock. Another 30 years. We promised ourselves we'd pay extra when we could, but those extra months, they rarely came. And the truth is, most of us will have a mortgage deep into retirement. And when it comes to whittling down this seemingly forever mortgage, the real motivator, that's you. Start by pulling out your amortization schedule. Look at the total interest that you'll pay if you keep the terms of your current loan. Then decide, what is your debt-free age? Make it visible. Make it non-negotiable. Every payment you make from now on should move you closer to that freedom date, not push it farther away. The second blunder a lot of us Gen Xers made was the remodeling. We've all been there. You get tired of looking at the ugly cabinets, the old countertops, and you start thinking, if we just open up this space and add another bedroom, I'll finally love this house again. And that's the beauty of owning. You can do whatever you want. But the catch is that $50,000 kitchen might only add $20,000 of value to your home. And maybe you're fine with that. You didn't do it for the return anyway. And that's okay. But call it what it is. It's emotional spending. It might bring you joy. You might love your house even more now, but it's not an investment. So if you want to truly have more time to enjoy your house, then pause every renovation going forward until you hit your retirement savings target for the year. Because your future self, it doesn't care about those granite countertops as much as getting the option to actually stay home in retirement with more peace of mind. Third blunder is the HELOC. Oh, yes, the Gen X safety net. Isn't it amazing how banks always find more ways for us to spend more? Okay, so just let me give you a quick history of the HELOC. Banks first started experimenting with them in the 1970s. Then flash forward to 1986, the Tax Reform Act. It eliminated most all interest deductions, except mortgage interest. So banks pushed HELOCs hard. And by the 1990s and 2000s, which were Gen X prime home buying years, they were everywhere. You'd get that call from your bank or your mortgage lender, hey, you've got $120,000 of equity just sitting there. So you open a HELOC, and the next thing you know, you're upgrading the kitchen, buying new furniture, maybe paying off some credit cards, and who knows what else. And the truth is that every time you use that line of credit, you're borrowing against your own future. So if you've got a HELOC, just freeze it today. And don't close it, because that can hurt your credit score. But just stop using it and let your equity grow again. The fourth blunder is appraisal envy. Remember how great it felt when your home's value jumped $100,000 seemingly overnight? It made us feel richer instantly, like we just won something. But that higher appraisal, it came with a cost. Higher taxes, more expensive insurance premiums. Now, your home's rising values, that looks like wealth. But much of that, it's being eaten away by ongoing costs of owning it. It's like the house grew and gained 500 pounds, and now you've got to feed it twice as much to keep it happy. So just take some time and sit down and do a real house budget. Include everything: the property taxes, the insurance, the utilities, the repairs, the yard work. Then compare that total to how much your home's value has actually gone up in the last few years, and you'll quickly see how much of that wealth is really being eaten by upkeep. Okay, blunder number 5 is the tax deduction myth. Somewhere along the way, we became obsessed with the mortgage interest deduction. We've even told ourselves, I'll keep the big mortgage. It's a great tax benefit. And the real story is that the deduction you're getting, it's worth far less than the interest you're paying. Some simple math: you might save $2,000 on your taxes while paying $8,000 in interest. That's not smart finance. That's self-sabotage. So just run a quick comparison. Calculate your total annual interest paid versus your tax savings on it. And once you see that difference, you'll more than likely stop calling it a benefit and start calling it what it really is, which is expensive debt. The 6th blunder is house rich and cash poor. Your home, it's been the center of your family and probably your finances as well. We bought during the McMansion era, and banks, they approved us for far more than we needed. So for decades, most of our money went into the house, not into retirement savings. On paper, our net worth looked pretty good. But in reality, we are house rich and cash poor. And because of this, for a lot of Gen Xers, that house, it might be the only way to fund your retirement. Now, how do you use your home to do that? Now, assuming that you have plenty of equity, number 1, you sell it and downsize. And I get it. Selling is emotional. But if you stay too long out of sentiment, your options start shrinking fast. Number 2, you sell it and go rent somewhere. You get the cash from the sale of the house. You use that to live off of and retire and pay your rent. Number 3, there's a reverse mortgage. But you've got to watch out for the fees on that, and you've got to read the fine print. Number 4, you do a HELOC or a home equity loan. But then the possibility of you ever paying off your home becomes pretty much non-existent. Or number 5, you rent out a room or the basement or a tiny house in the backyard. And just be ready to be a landlord and deal with less privacy. But those are all viable options. But whatever you do, the earlier you plan, the more peace of mind you'll have later. So look, these mistakes, they're not unforgivable. They're all totally fixable. And just remember that your home isn't your retirement. It's where you live your life. Now, if this video got you to thinking about the unique financial challenges that we as Gen Xers face, then you'll definitely want to watch this video next. Gen X reality check. Are we carrying everyone's burdens? In less than 15 minutes, I share solutions for the biggest money struggles and issues that we face. I've linked it right here. And as always, I appreciate you watching. You're the bomb. I hope you have a great week. Bye.